Hello students, welcome to the part 2 of Accounting for Shares, in which we are going to deal with the difference between partnership and company. So let's start. This partnership is the volume 1 in our course of accountancy in class 12, and we are dealing here, that is volume 2. But we have to know that what is the difference between a partnership and a company. In simple terms, we can understand that a partnership is, as the name prescribes, that when two or more persons come together to do a particular business and share their profit, it is called a partnership. But when this partnership business gets registered under Companies Act, it becomes a company. It is simple like that. So let's understand the difference between partnership and company. First difference is it is a set of agreement among partners. Registration is not compulsory under Partnership Act 1932. As the partnership is regulated by the Partnership Act 1932, but it is not compulsory for a partnership business to register itself under the Partnership Act 1932. But in case of company, the registration of the company under the Companies Act or 2013 or any other previous act is compulsory. Second difference is in India, partnership is regulated by the Partnership Act 1932 and company is regulated by Companies Act 2013 in the current period, and previously it was regulated by the Companies Act 1956. Now, third difference is minimum number of members in a partnership business is 2 and maximum is 50 according to section 464 of Companies Act 2013, which means the maximum number of members is not prescribed under the Partnership Act 1932. It is written in the Companies Act 2013. But in case of companies, there are majorly three types of companies. One is public company, second is private company, and third is one person company. So in case of public company, the minimum number of members will be 7 and maximum is unlimited. Means there is no limitation of maximum number of members. In case of private company, the minimum number of members can be 2, but the maximum numbers cannot exceed 200. So in case of private company, minimum number of members can be 2 and maximum numbers can be 200, including their previous partners or previous members. And in case of one person company, there is only one person present and there is no maximum number prescribed for one person company. One person company can be understood as when a sole proprietorship business get registered itself under Companies Act, it becomes a one person company. So let's revise it. Under Partnership Act, it is not compulsory to register a partnership business under Partnership Act 1932, but under company, it is compulsory to register a company under Companies Act 2013 or any other previous Companies Act. And second, partnership is regulated by the Partnership Act 1932 and companies regulated by the Companies Act 2013. For members, in partnership business, we can have minimum 2 number of partners and maximum 50 partners as prescribed by the section 464 of Companies Act 2013. But in case of company, we have three types of companies: public company, private company, and one person company. For public company, we can have a minimum number of member of 7 and maximum number is unlimited. In case of private company, the minimum number of members is 2, maximum is 200, and in case of one person company, there can be only one member. Other difference between partnership and company are: fourth difference is the liability of the partner can be unlimited, joint, or several. Means, in case of partnership, the liability of the partners can be unlimited, or it can be a joint liability, or it can be several liability. Means, in case of one person company, all the liabilities of the partnership business. Or now the fourth difference between partnership and a company is the liability. The liability of partners in case of partnership business can be unlimited, joint, or several. But in case of company, the liability of the members are limited up to the shares held by them or the guarantee given by them on winding up of the company. That is known as limited by guarantee. As I already told you that there are also unlimited companies present in the market. So in case of unlimited company, the liability of the members can be unlimited. But here in India, only limited liability company is present. So the liability of the members of the company are limited up to the amount of shares they have purchased, or the guarantee they have given to the company that they will provide that much amount of money at the time of winding up of the company. So the fifth difference between partnership and company is distribution of profit. Profit are distributed as per the terms of partnership deed, or equally if partnership deed does not exist. In case of partnership, we distribute profit according to the partnership deed. But if the partnership deed does not exist, we will distribute the profit equally among the partners. But in case of company, the board of directors decide how much dividend is to be paid. Means the decision of the dividend is on the hands of board of directors. Dividends are of two types: interim dividend and proposed or final dividend. Interim dividend is declared by the board of directors, while the proposed or final dividend is approved or declared by the shareholders. So this is the difference between partnership and company, that distribution of profit is done according to partnership deed in partnership business, and in case of company, the distribution of profit, that is known as dividend, is done on the basis of board of directors decision. Somewhere it is affected by the shareholders decision also. So the sixth difference between partnership and company is audit. In case of partnership business, audit of books of accounts is not mandatory, but in case of company, audit of books of accounts is mandatory. Means we have to audit the books of accounts of a company, but the partnership business, but in case of partnership business, it is not compulsory or mandatory to audit the books of accounts. Now next, seventh difference between partnership and company account are management. In case of partnership business, business may be managed by all the partners or any of them acting for all. Means, in case of partnership business, all the partners can manage one business, or any one of them can manage a business, and his decision is accepted by all the partners. So partners manage business in case of partnership. But in case of company, business is managed by the directors who are elected by the shareholders. As I already told you that in the meaning of company, that the shareholders of a company are spread all over the world. So it is not possible that every one of them come uh, to the board meeting of the company or at the office of the company for the management of the company. That's why they elect some board of directors who manages the business of the company. So in case of partnership business, partners manage the business of the partnership, and in case of company, shareholders, elected members, that are directors, manage the business of the company. Now the eighth difference between partnership and company is business. A partnership can carry on any business if all the partners agree. Means To carry on any kind of business or to do any kind of business, it is compulsory in case of partnership that all partners agree for that business. If one of them does not agree with the thought of the other partners, that business cannot be carried on by the partnership business. But in case of company, a company can carry on only that business which is permitted by object clause of memorandum of association, MOA. Means in case of company, a company can carry on or do any business if it is written in the object clause of memorandum of association, which is also a very important document in case of company. About all these documents like AOA, article of association, MOA, memorandum of association, prospectus, you will study all these documents very deeply in the business studies book. Here you will get only the overview about these documents, but in business studies book you will get all the information related to these documents. So all these are the differences between company and partnership. Now next slide is the ninth difference between partnership and company. So after eighth difference, the ninth difference between partnership and company is transferability of shares. A partner can transfer his profit share to other person as is provided in the partnership deed or with the consent of all the partners. Means in case of partnership business, a partner cannot transfer his share freely to anyone. If he wants to share his profit with any other person or transfer his profit share to any other person, he have to get the consent of all the partners in case of partnership. But in case of company, except in case of unlisted or private companies, transfer of share is not restricted. Means companies are of three types: private company, public company, one person company. In case of private company or one person company which are not listed under the stock exchange, the transferability of shares is restricted up to the document called Article of Association, AOA. But in case of public company which is listed under the stock exchange, the transferability of share is not restricted, because in stock market anyone can go and purchase the share of any business or any company. So in case of public company registered or listed under the stock exchange, transfer of share is not restricted. But in case of private company and one person company or and public company also which is not listed under the stock exchanges, the transferability of share will depend upon the document called AOA. Whatever is written in the document AOA, that is Article of Association, the company have to follow that rule only. Now the 10th difference between partnership and company is winding up. A partnership may wound up by on agreement or by an order of the court. Means a partnership business may be wound up by the agreement, that is partnership deed. Sorry, partnership deed. Means whatever the rules written for the wound up of the partnership in the partnership deed will be followed at the winding up or dissolution of partnership. But if there is one way of winding up partnership also, that if the court orders us to wind up or dissolve our partnership, then we have to follow the court order and dissolve our partnership business. One more thing is there in case of partnership, that if partnership business becomes insolvent, or we can say if partnership business is not able to pay its debt, means debt payment is not possible, then the Insolvency Act will apply under the partnership business. So this is the case of finding up the partnership business. First is, it will depend upon the agreement, that is partnership deed. Whatever written in the partnership deed will be followed, or by an order of court. If the court orders to the partners that you have to wound up or dissolve your partnership, then they have to dissolve that. Or if the firm is not able to pay their debts, then under the Insolvency Act, the partnership can get dissolved. But in case of company, a company can be wound up only by the process prescribed by the Companies Act 2013. Means, to wound up the company, we have to, or we need to follow the rules prescribed by the Companies Act 2013. Whatever the rules written here in the Companies Act 2013, we will follow that to wound up our company. But partnership can be dissolved by the these three types of situation. First is by agreement written, or second by the order of court, or third the Insolvency Act. Now the last, that is 11th difference between partnership and company is stability of the business. It is affected by the retirement or insolvency of the partner. Means, a partnership business gets affected by the death, retirement, or insolvency of the partner. If there is two partners only in a partnership business, and one get retired or insolvent, become insolvent, or died in any situation, then the partnership get automatically dissolved. Because to admit a new partner in the business, we have to follow various types of procedures. So currently, if there are two partners in a partnership business and one gets die, or get retired, or get insolvent, the partnership business get automatically dissolved or wound up. But in case of company, company is an legal person or artificial person, so company is also having the perpetual succession. That's why the death, insolvency, or transfer of shares does not affect the continuity of the company. So the position of the partners affect the partnership business, but the position of the shareholders does not affect the life of the company or existence of the company. Company will continue till the end, until it gets wound up under the rules prescribed or process prescribed under the Companies Act 2013. So all these are the differences between the partnership and company. You can go through that or make a note of all the things, and whatever I taught, you can make a note of that, because some things are not written here. So you can rewind the video and watch it again, so that you can get the hidden points also. So students, this is all with the difference between partnership and company. Now we will meet in the third part, where we are going to deal with the type of company and its details. So thank you so much for listening, and please like, share and subscribe my channel Commerce E-Learning, and do comment in the comment box for any kind of suggestion. Thank you. Goodbye students. See you in next part.